every penny that you pay into rent, you will never see again. In terms of the American dream, I think that we have to adjust. We want to have economic stability. We want to be able to provide for our families first, for our unit, and help them grow in terms of education and equity and things of that nature. So it's not that it's dead, it's that it's a total different outlook than it was maybe 40, 50 years ago.
Hello, everybody. Welcome to another episode of Lessons to Legacy, where we talk about lessons and what, set up the legacy.
Yes. Yeah.
In this case, we're talking about housing. We have a very important question. I think myself in my personal life, I'm asking, but of course, many people, maybe older than me, maybe younger than me in different stages of life, are definitely asking economically. And that question is the American dream dead? I go by Voice of G, a creative producer. And today I'm joined with my co-host, of course, my father, the original G, Mr. Fabio Gomez, a very knowledgeable expert in the housing market today. So is the American dream dead? In your opinion, how do we navigate this question?
Well, I wouldn't say that it's dead. I think that it's changed. What the American dream used to be maybe 50, 60 years ago is different. What it was 20 years ago and what it was 20 years ago is very different what it is now. But there's so many economic factors and cultural factors that have pushed things just to kind of make the bullseye of the American dream change all the time. One of the things we talked about earlier was that, back in the 70s, 60s, 70s, the prices of homes, general homes, medium price homes, were about maybe 3.2% of your yearly income. That was the size of the price. Now it's more than 5 times your income. That's the house you can afford in terms of affordability. That has changed the culture of economics. There's a culture involved with economics. Everybody teaches, your kids, home ownership is the way to go always. But for the first time in my life, professional life, I've been hearing some other voices and saying that, hey, listen, just rent all your life and then just invest in the stock market. Which, when they talk about, for example, the difference between whole life insurance and term life, people say, no, term life is cheaper. Just get it and then invest the rest. And so, but the thing is, home ownership has the unique quality of having a tax benefit. The other thing is you're building your own equity. When you're renting, you're paying someone else's equity. That's every penny that you pay into rent, you will never see again. In terms of the American dream, I think that we have to adjust. We want to have economic stability. We want to be able to provide for our families first, for our unit, and help them grow in terms of education and equity and things of that nature. So it's not that it's dead. It's that it's a total different outlook than it was maybe 40, 50 years ago.
Some of us are waiting for interest rates to change, waiting for the right price to go down, to see on Zillow and all these different apps. In your opinion, is it wise for you to just kind of wait for things to get better, or should you maybe get more knowledgeable before you make a decision? Like, how does a first-time home buyer, navigate the situation? Or what tips can you give that first-time home buyer?
That is a great question if you are a first-time home buyer. The thing is that nowadays, difference between 20, 30, 40 years ago, the home buyer now has so much information thrown at them through YouTube, through TikTok, through Instagram. Before, it was just your mom, your dad, your neighbor, your brother. Those were your source of information. And now with the onset of technology, you have all of these platforms. And I'll tell you something, Zillow gives you information, but let's not sugarcoat it. Zillow, the sole purpose of Zillow is to gain referrals to realtors. Zillow was created for the sole purpose of providing leads to realtors. That's why it says it's free. Well, because when you register your phone number, your email, your name, was a price range, guess what? You're going to get calls. People don't say, oh, I saw that you were looking in this house. So, but in terms of information, there's so much information. There's overabundance of information, but also there's also misinformation. So generally speaking, the first step is numbers. It's not how pretty the house is. So it's the numbers. What are the numbers looking like? What kind of down payment? What kind of credit score you have? What kind of income? So I was saying that pre-qualification is step one, even before you start looking at houses. See what you can afford. Because what's going to happen, you're going to go Zillow or even contact with a realtor, say, I want to look at houses for $500,000. Unless you've had the experience of having a duffel bag full of $500,000, the concept of $500,000 doesn't really mean anything. I always tell people, what's more real, $500,000 or $3,014.22? That's more, it's more tactile. You can understand that number much better. And so, one of the first steps of doing this is you're going to do the research, but it's good to be doing the research with a knowledgeable expert locally.
And one of those myths or questions that I've been pondering about is definitely that 20% myth. Like, is it in 2025 and going forward still realistic, still something that's valid, that you need at least, that 20% down payment in order to start making payments? Can you do less? Can you do more?
Yeah.
What you're thinking?
Yeah. The common phrase of the 20% is only because that eliminates mortgage insurance. Mortgage insurance is an insurance policy that the mortgage bank puts on you in case of foreclosure. It makes sure it recoups all their expense and all the money involved in reselling the property after a foreclosure. So it's an insurance policy put on you. You pay for it, but the benefit is to the bank. And so, yes, you can buy with less. You can buy with 10. You can buy with 5. You can buy with 3. You could actually buy with 1% down payment. Actually, there's a down payment assistance that you don't have to pay anything down payment. The thing is, it sounds great, and some people really take advantage of these things, but these are not the types of loans where you're going to be paying the lowest rate possible, because you have either a second mortgage, which is the down payment, or you have a lien on the house. It's not a mortgage is a lien, so a lien is not necessarily a bad thing. But you have the down payment. Let's say they gave you $10,000, $15,000, $20,000 to buy a house. That lien is against the house, and so yes, you didn't with 20%, but there's other factors that take an advantage. So yes, the answer is you can buy with a lot less than 20%. You can buy with 5 or 10. Most people who are buying first-time home buyers, they're buying with 3.5% down payment. So like a $200,000 home, you're putting $7,000. So yeah, it is a myth, but there's a reason behind it. When you're paying 20% down payment on a conventional loan, there is no mortgage insurance.
And can you tell us a little bit about your personal home buying experience? Maybe some things that you didn't take into account and at the beginning, and maybe you had a lesson learned, or maybe tips and tricks as you're making your rounds around the neighborhoods and seeing different homes. What tips or tricks can you give? First time.
My first home that I bought was here in Orlando, in an area called Meadowwoods, with a really nice house with a pool. And the first thing is they talk about motivational speaking and motivational speakers and things like that about your why. You have to know exactly what is it you want, where is it that you want to buy, what purpose, if you want to be in a place where there is a very low crime rate, or have excellent schools, or because it's closer to work, or closer to an expressway that takes you to work, or just because it's closer to family members, things like that. And that has to be part of the factor of determining, where you want to live. So in our case, we saw a lot of homes. I ended up buying the home in Meadowwoods. It was affordable. It was a nice area. There was a lot of potential to fix it. It wasn't in pristine condition, but we saw the potential. Oh, we would quickly do this here. We need to cabinets over here. We paint this over there. So it all depends on what your motivation is in buying the house. If you want a house that's in perfect condition, that when you move in, you don't have to do anything to, well, that's the type of house you have to look for. But you have to adjust your economy to that.
Right. That's a great response there. And
thank you.
Yeah, of course. And I know that we've spoken about this before as well, briefly, but what are some rule changes? I know that as you're seeing homes, is it true that you now need to have paperwork signed with a realtor, or, what kind of rule changes have been?
Yeah. So prior to August 2024, if you approached me on the street, hey, I heard about you. You're a great realtor. I want to see some homes. Can we go out see some homes? First thing I'll do is, are you pre-qualified? And it was like, yeah, I already got pre-qualified. I said, excellent. What zip codes, square footage, thing like that. We narrowed from 20 houses, we narrowed down to 3 or 4. Let's go today, look at 3 or 4 houses, and we just go see them. If you fall in love with one of the houses, you want to put an offer in, then we negotiate with the seller in terms of price, closing costs, things like that. Nowadays, if you see a bunch of houses on Zillow and you say, you want to see these homes I saw on Zillow, there's an agent, or you have a cousin who has a friend who has a neighbor that uses realtors really good, you contact the realtor, say, hey, I have these 3 houses I want to take a look at this weekend. Excellent. I need you to sign this document right off the bat. In fact, if you don't do that, the realtor's probably not living up to the correct rules and ethics needed. So just to show the house, you have to provide the buyer, potential buyer, with a buyer's agreement saying, hey, listen, this is my job as your realtor. I'm going to advise you. I'm going to protect you. And when we put in the offer, these are the steps that we're going to do. This is how I make my commission. This is how much I make. And so, yes, commission statements are spoken. You speak about them at the very beginning. Before, I never really mentioned much. Well, most realtors didn't mention much about their commissions because that was something that was worked between the seller agent and the buying agent. That was behind the scenes, so to speak, because of the rule changes and the law. It's a conversation you have with the buyer, because in essence, the buyer is also participating in your commission. Why? Well, the commission is based on the sales price, which the buyer's paying. So indirectly, yes, the buyer is paying a portion of that commission. Obviously, the seller is paying from their proceeds this money. So that's the rule changes, and it is very, very important to know that. But that's why it's important to have a trusted, knowledgeable, educated, and seasoned realtor that will be able to negotiate these things for you.
As we're unfortunately, wrapping up here on this first episode of the Lessons to Legacy podcast, is there anything else you'd like to share?
We talk to a lot of people you speak to that are currently renting for years now.
Yeah.
I mean, why you're still renting? Oh, well, I want to buy a house, but I want to buy it. I heard there's a crash coming. Mm-hmm. Well, that conversation has been going on for, I don't know, like 8 years now. There is no crash. And if there is an adjustment, it's not a crash. And then people say, oh, well, when the price goes down 20, 30%, then I'll buy a house. Well, the thing is this. Right now, for example, the market is slow, meaning that it's a buyer's market. So buyers can pick and choose houses because the homes have been sitting on the market for a long time. You don't have to be a realtor to understand this. Right now, rates are about like 6.5 right now. Okay. And so it's a slow market. Sellers are willing to negotiate with you more. What's going to happen when that rate goes, let's say, theoretically, it would be great. It goes down from 6.5 to 4.5, 2% down. What's going to happen when that rates go down? You have 40 or 50 people doing the exact same house that you fell in love with. And now you're having to compete with a bunch of other people on the price. What's going to happen? The house is listed for $350. Guess who won the house listing? The one who went at $370, which is what happened 4 or 5 years ago. Prior to COVID, the houses were listed for $300, and you had all these people coming down from New York, New Jersey, who had an extra $100,000. Hey, I'll pay $40,000 above asking, $50,000 above asking, $10,000 above asking. I'll close in 10 days cash. Why? Because the rates were so low. There was so much competition. So right now it's a great moment to buy because you're going to have less competition. It's strategic. And because the properties has been sitting on the market for a long time, sometimes you're able to extract extra money from the seller to get that rate with discount points, bring it down from 6.5 to 4, 6.5 to 5. So you're saving a lot of money, and you're not having to compete with 40, 50 people, because people got frustrated back then because they kept on looking at a house and, I fell in love with this. Oh, it's already in a contract. Oh, I want to go see this Saturday. I can't. I'm off on Saturday. By Thursday, the house is already under contract. And so have the mindset of now. It's a joke between us realtors, but when people ask us, when's the best time to buy? Last year. That's the best time to buy. You couldn't buy last year, let's buy now. Date the rate, but marry the house. Everyone in Florida knows someone that has moved in their neighborhood within the past year. Here in Central Florida, first-time home buyers, the average time when you buy your first house till you move, You would think it was like 10, 15, no, 7.5 years. Because circumstances change. You make more money, you want to live in a neighborhood, better neighborhood. Mom and dad came to live with you because they're older. Now that 3-bedroom, you need a 4-bedroom. You got a couple of kids, and well, now we're going to go 5-bedroom. Then the 2 kids go off to college. Now you don't need that 5-bedroom anymore. Just go to a 3-bedroom. Mom and dad, they are no longer with us. They earned their wings. Well, we don't need the 3-bedroom anymore. It's just us 2. We're going to retire soon. Let's just go to a 1-bedroom or 2-bedroom condo. So, especially in Central Florida, there's so many changes. That you got a job in Orlando, and 4 years from now, you have an incredible opportunity to work in Tampa. You got to sell your house. It's temporary. Dating is temporary. The rate doesn't have to, if it's a 7%, if it's 6.5%, it's 6%. You don't have to stay with that mortgage for 30 years. Wait till the rates come down. You have more equity, because when you bought the house, it was a 5% down payment. Now you have 30% equity in the property. Guess what? That rate's going to be lower. And when rates eventually, because they fluctuate. When rates go down, boom, refinance right away.
Well, thank you again for this conversation. Easing our anxieties. The American dream has changed, but it's not dead. Thank you for tuning in to another episode of Lessons to Legacy. We'll catch you next time on episode 2.
Later.